Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoy this video, don't forget to hit the like button, subscribe to our channel, or leave us a comment below. Let's get into it. Gold hit yet another price milestone this week, breaking through $2,600 per ounce after the U.S. Federal Reserve cut interest rates by 50 basis points. The long-awaited reduction is the first since 2020 and places the target federal funds rate at 4.75 to 5%. Aside from its emergency cuts during the pandemic, the Fed hasn't lowered rates by half a percentage point since the 2008 financial crisis. After taking rates down to near zero during COVID, the Fed embarked on an aggressive hiking cycle in March 2022, reaching the 5.25 to 5.5% range last July. Since then, market participants have been closely tracking comments from Fed Chair Jerome Powell to try to glean insight on when the downward cycle would begin. At the beginning of the year, I heard from many experts that the Fed's first cut was likely to be a strong catalyst for gold. It's no secret that the yellow metal tends to perform well when rates are low and face pressure when rates are high. But instead, gold embarked on a record-setting price run ahead of any Fed action, raising questions about what the cut would actually end up meaning. With that in mind, I asked Brien Lundin of Gold Newsletter what's next for gold now that rates are on the way down. Here's how he explained it.
Now, going forward, I think that what's going to happen is markets are going to price in gold specifically, continued rate cuts, and try to reach out there and feel ahead to whatever the Fed seems to be seeing now that it's being so aggressive in its rate cuts. So I don't think this is the end of this move in gold. I think it's going to continue because the baseline factors like real interest rates are going to be falling very quickly from this point forward.
Brien also touched on the cost of servicing the debt in the U.S., saying that it remains untenable even with rates on the way down. Chris Blasi of Neptune Global shared a similar perspective, saying that this is a key reason gold will keep rising. Let's take a look at what he said.
Because you have to step back and see what's, in my opinion, and see what's really happening on the big picture. And the big picture is, again, not to be redundant, but it is quite simple. The growth and the debt and the dollar or the euro, if you're measuring it in euros, is unrelenting. And there's going to be little news stories that come out and everyone's hanging on what the Fed does, but the economy can't go back. We're stuck with this massive, unrelenting debt creation to keep the whole thing, propped up. And regardless of a news story and to me, it's really just to divert people's attention, right? And think like things are going to get fixed or we're going to get on the right path with a rate cut here or a rate hike there, depending on, the situation. I think big picture, and it's proven, we've gone through rate cuts and rate hikes over these 24 years. And at the end of the day, despite some short-term moves, gold keeps moving up because the big picture, nothing's going to change.
I'll leave the link to the full interview with Chris below, and we'll be posting Brien's interview early next week. I definitely recommend checking them both out. To wrap up on the Fed, it shared its latest dot plot after this week's meeting, showing where each official thinks the target federal funds rate is headed. The document indicates that currently 50 more basis points worth of cuts are expected this year, with another full percentage point anticipated in 2025 and half a percentage point on deck for 2026. The Fed has 2 more meetings in 2024, one in November and one in December. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.